Hey guys, how's it going? In this vid, I'm going to give you my weekly portfolio update, and then I'm going to give you my thoughts on Cloudera and why I think it might be a great buy. Alright guys, so as you can see, my portfolio is roughly the same as last week. We had a pretty rough Monday and Tuesday. I actually dipped below 5 digits, but we're starting to bounce back. I don't know if Thursday and Friday is going to treat us the same. I'm recording this on Wednesday. You guys are going to be seeing this on Friday afternoon. So let's go over the positions. So Bank of America, total gain and loss, down 15.6%. Cloudera, we are up almost 20%, and that's the company I'm going to be going over in a second. Cisco, you see the dashes there. That's because my dividends hit today. It bumped my shares up from 47 to 48. So Facebook, up 0.19%. I mean, we're getting good on Facebook now. Facebook's starting to come up. Realty up to 2.11%. Pfizer up 11.58%. Qualcomm down 5.69%. Revolve down 26.10%. Sony down 11.38%, and Uber, we are up 3.42%. As overall, we are down 4.28%. And the portfolio was $10,218, so roughly the same as last week. And as far as moves I made, so this week I deposited $200 in the Bank of America. So if you don't know, every month I deposit $1,000 into my Fidelity portfolio, and then from that, each week I deposit $200 into a dividend position that I currently own. I try to choose the one that's the closest to its 52-week low. So far, it's still Bank of America. If it ends up still being Bank of America next week, I might choose the next one up, which I think is Realty. But this week, 200 in Bank of America. I also received dividends from Cisco, which I reinvested back into the position. And that's my portfolio. Now let's talk about you smashing that like button. Now let's talk about Cloudera. So what is Cloudera? Cloudera is one of the big data companies. They take your data and they do stuff with it. Data management, trend analytics, machine learning, stuff like that. They can take a company, analyze its data, analyze its various data, and then they can use that data to tell the company how they can work more efficiently. We're going to take a look at their website in a minute, but their biggest product is CDP, the Cloudera data platform. That is a hybrid cloud or a pure cloud data management platform from which customers that use it can do the data analytics and management and trend learning and stuff like that. So taking a look at their website, so this is it. One of their biggest selling points is that instead of their data management platform being on-prem, it is in the cloud, so Cloudera, right? They offer their services to a wide range of industries: financial services, telco, public sector, healthcare, technology, manufacturing. They have a lot of well-known customers. The U.S. Census Bureau uses them. You may see some names you recognize here, but the Hilton uses them, ADP uses them. These are just the names I recognize, but I'm sure, Nissan, Quest, Intel uses Cloudera, Dell uses Cloudera, the New York Stock Exchange, they use Cloudera. So they have tons of different customers, well known. If we want to look at their market share, I don't know if Data Analyze is the best place for market share, but this is what I found. If we look at this, we see that Cloudera owns 6.28% of the big data market share. Now, one thing to note is back in 2019, Cloudera recently merged with Hortonworks. So you can see Cloudera and Hortonworks. If we add that together, we get roughly 10%, which puts them just under Apache for the top spot in terms of big data. So when evaluating a company to see if it would be a good position for you to hold, one good thing to look for is whether they command a sizable market share. And judging by this, with the 10%, Cloudera certainly does. Now, one thing you want to look at whenever you're evaluating a company is its 10K, is its latest 10K, and this is no exception. You should always read the 10K from the beginning to the end. Now, I'm not going to bore you with that, but if you plan on checking out Cloudera, you should read their 10K. This will give you everything from their risk factors, their business model, stuff like that. And you can see all their different products, the Enterprise Hub, Data Warehouse, Operational DB, Data Science and Engineering platforms, the Hortonworks data platform. That's when they merged with Hortonworks back in 2019. Let's take a look at their financials. So we can look at their financials throughout the years, and we can see the revenue going up. When you're evaluating a company, that is one fantastic thing that you want to see, and you can see it going up year by year by year. As far as their gross profit, you can see that going up year by year by year as well. Now, one thing, full disclosure, Cloudera has not made a profit yet, but that shouldn't immediately deter you from, buying into a company. I mean, Uber hasn't made a profit yet either, but I still feel pretty bullish about their long-term success. Now, that being said, one thing you may notice is that from 2019 to 2020, you'll see a huge jump in loss from operations, despite having them growing in revenue and gross profit. Well, if you look here, you notice that their sales and marketing expenses and their research and development costs have shot up. And if you skip ahead to this page here, you can see where the 10K spells it out for you. A large part of this operating cost is a result of the Hortonworks merger. They had to issue a whole bunch of stock options and other expenses that come when you merge with another company. I'm not a business expert. I don't know what other expenses come with it, but I'm sure you can find out all the details in the 10K. But what I want to show you here is that there's a good reason for the operating costs this particular go around. And if you take a look at their GAAP versus non-GAAP, GAAP is pretty much the financial stuff that has to conform with when they file with the SEC. The non-GAAP gives the company a chance to explain the revenue better on its own terms with it, for example, one-off payments that they had to make and stuff like that. You can see here that if you take out the stock-based compensation expense and the other stuff that came with the merger, you can see their loss. The loss went from 67 million to 39 million, which makes me feel a ton better about this stock. Now that they merged with Hortonworks, which is, Hortonworks was another major player in the big data. They pretty much did the same stuff as Cloudera with I think they had a little more gravitas towards security. One other thing I wanted to bring your attention to, if you go to the balance sheet, their assets versus liabilities, they have so much more assets than liabilities. Their balance sheet is absolutely wonderful. If you look here, there is no debt at all. So if the company had debt, it would have to have shown up here, which it doesn't. So this company has no debt at all. Its assets versus liabilities is heavily skewed in the favor of assets, which gives me confidence that this company could survive an economic downturn, like we're going through right now. So if you can see on Yahoo's summary page, they're trading at $7.73 as of right now. As far as the stock price, they have a market cap of $2.282 billion. Taking a look at analyst estimates, we're going to go over to Yahoo Finance. So as you can see right now, they're negative EPS, which is what happens when you operate at a loss. According to the analyst estimates, they're supposed to jump from a negative 0.13 EPS to a positive 0.23 EPS by the end of the fiscal year 2021. And then that's supposed to jump up again to 0.37 at the end of fiscal year 2022. You want to see those numbers going up. So I don't know if this is going to be affected too much by the current virus situation, but as far as we know right now, they're supposed to be profitable by the end of fiscal year 2021. As far as their revenue, is expected to jump from 794 to 859 as an average, and then it's going to jump again to 940. Now again, these are just estimates, so this could all change drastically based on the current situation. If you go to the growth, Analysts are expecting a 276% growth this year and another 60% growth next year. We'll see if that holds true. I have a pretty good feeling about this company, and Cloudera seems to be handling things very, very well. If we look at their PE ratio, they don't have any right now, which is, I mean, if you're not profitable, you don't have one. If we look here, they have a PE of 93.46, which I'm just happy that they have a 4 PE now, so that's good for them. So yeah, that's Cloudera. Am I gonna invest all my money in them? Am I just gonna load the boat on them? No. I mean, they're still up and coming. I'm not gonna, you know, I'm not gonna go all in on them. But I do feel very, very confident and bullish about their future, and I am going to keep investing in them while the stocks are trading as low as it is. Have a great day, and watch this video where I talk about Bank of America.